welcome back. Well, oil prices dropped for a second day today on worries about slower fuel demand growth as outbreaks of highly contagious COVID-19 variant Delta sparked new mobility restrictions around the world. Brent crude futures fell 35 cents to $74.33 a barrel after slumping 2% yesterday. U.S. West Texas Intermediate crude futures fell 34 cents to $72.57 a barrel, extending a 1.5 loss on Monday. OPEC's demand forecasts show that in the fourth quarter, global oil supply will fall short of demand by 2.2 million barrels per day, giving the producers some room to agree to add output. Analysts expect OPEC Plus to step up supply by about 500,000 barrels per day in August, as the market has tightened on strong growth in fuel demand in the United States and China, the world's two biggest oil consumers. Well, for more on oil prices and happenings in the commodities market, we're being joined by Desola Sumoni, research analyst with Financial Derivatives Company. Hello, Desola. Thank you so much for joining us.
Today.
So for a second day now, Brent crude has slipped at the global commodities market, driven by expectation that OPEC will increase supply by 500,000. How will this affect prices, and what's your short-term outlook?
Thank you for that question, Ini. Like you said, oil prices, global oil prices has declined to a one-week low, $74 per barrel, and mainly driven by expectations that OPEC would agree to increase production. Will agree to ease their production quota by around 500,000 barrels per day when they meet later in the week. We're also seeing, like you said, increases in the spreading. We are seeing this Delta strain of the coronavirus spreading in parts of Europe, in parts of Asia and Australia, and that is, halting the easing of some of the lockdown measures and even leading to the reimposition of some restrictions, and that has implications for international travel and also for oil demand growth. So, but I think that oil prices in the near term, the medium to near term, will remain elevated because of the rollout of vaccine is still at pace, and then investors are still betting on oil that oil prices would increase. Also, oil demand growth, there's still huge room for oil demand growth to increase. It has not reached pre-pandemic levels, and like you said, the outlook is that the oil market will remain undersupplied for the next 12 to 18 months.
All right, but as Brent price increases at the global commodities market, so does landing price of PMS in Nigeria. And latest data shows that landing price of PMS in Nigeria is at 232 naira per litre. What are your thoughts on this development?
I think for Nigeria, higher oil prices is like a double-edged sword, right? So on one hand, higher oil prices is positive, for the government, for FAC revenue, for the external reserves. Even it gives the central bank more ammunition to kind of like defend the exchange rate. But on the other hand, because Nigeria is still an importer of PMS, higher oil prices in the global market means a higher landing cost. And like you said, currently the landing cost is at 232 naira per litre. Meanwhile, the pump price is about 162 naira or 165 naira per litre, depending on where you buy it. So that is like a subsidy of around $67 to $70, 70 naira, beg your pardon, per litre. Now, if you bring that to daily figure, given Nigeria's PMS demand daily, it comes to about 6 billion naira. Bring it monthly, it comes to about 180 billion naira, and bring it to an annual level, it becomes about 2.2 trillion naira. And that is around like 16 to 17% of Nigeria's 2021 appropriation bill. So obviously this is such a costly endeavor, and honestly, Nigeria's fiscal space cannot handle it. However, we continue doing it, and I feel that we're in a situation where we are just kicking the can down the road. Yeah, a lot of discussions on whether for subsidy removal and whatnot, but I feel like there will be some, if and when the forced subsidy is removed, which I think 100% should be done, there would be some short-term cost in terms of higher prices of PMS, obviously higher transportation costs. It may even reflect in the inflation numbers, but there are estimates that removing subsidy from Nigeria will save the country around trillion naira per annum. And if this money is repurposed for social protection, for instance, for pro-poor policies, I think that the long-term benefit will significantly outweigh the short-term costs of removing it.
You know, every time we have this conversation on this program or any other program on Channels Television, we talk about the essence and the importance of removing the subsidy. But when you go out on the street, it's not a very popular opinion, as we see reaction from labor union and Nigerians generally, you know, whenever the issue of subsidy comes up. So from your perspective, if we keep managing, which is what I feel we are doing now, paying subsidy, paying up to about 2.2 trillion naira just to keep the pump price at what it is at this time. What do you see happening to the economy, you know, with this continuous management and padding of the subsidy that we're doing?
I think that one consequence is that there's so many things that can be done, but because of, you know, the money is for other maybe capital projects, for instance, poor policies, for instance, those monies are used to finance the what's it called now, the fuel subsidy. I think so. There are many things that would suffer for it. But going away from that conversation, I think one of the necessary conditions or preconditions to removing the subsidy is to get the refineries to work. I think that is a major issue that is missing in this equation. I understand that, you know, Dangote refinery is going to come on stream very soon, but I think that a wider conversation should be around getting the refineries to work. If we get the refineries to work and we are refining our PMS demand locally, I think then this conversation of subsidy would be easier to have.
Well, having the conversation of even getting the refineries to work is another long conversation, because I remember when we were talking about the Port Harcourt, rehabilitation of the Port Harcourt and the billions of naira that is needed for that, raising that money was also a major conversation. So how do we get refineries to work when the refinery also need funding, you know, before they can start working? So where do we really start from?
I think one is getting the private sector involved. Getting PPP, public-private partnerships, getting those involved. I think also there's a lack of trust in the government, and it is with due reason. Like, you know, there's a lot of, you know, policy uncertainty, and that is why I think that, you know, foreign direct investors are really just maintaining tentative positions regarding Nigeria. So I think that if, you know, the government can get the private sector involved, I think it's not rocket science. It can be done. That is not whether it's not a debate of whether it can be done or it cannot be done. It can be done. It's just a matter of doing it, whether the government has enough political will to do it, or whether we're just going to keep kicking the can down the road.
All right, so our coal price at the global commodities market jumped 64%, you know, reaching a decade high of $127 per ton, despite green energy initiatives. What's driving the price?
Excuse me. Thank you for that question. First, let me give you some background about coal. Coal is like for lack of a better word, the dirtiest of the fossil fuel. It has the highest greenhouse emission. It has the highest carbon emission of all fossil fuels. So it is the enemy of this green industrial revolution. And like you said, we saw prices increase sharply year to date, 64% for European coal and about 56% for Asian coal year to date, and that's driven by many factors. One is a shortage of natural gas, which is a cleaner substitute or is a renewable substitute for coal. Another reason was an increase in electricity demand as the world recovers from the coronavirus-induced shock. There's an increase in demand for electricity, and that's why we are seeing a lot of demand for coal. Also, we are seeing a scarcity of rainfall in China, which is reducing the amount of energy produced from hydro sources. On the supply side, we are seeing for some of the larger producers of coal, for Indonesia, Australia, we are seeing flooding in those countries, which is reducing coal supply. We are also seeing a closed mine in Indonesia. No, not in Indonesia. Sorry, a closed mine in Colombia, which is also one of the largest producers of coal, which is reducing the supply for coal, and that's why we are seeing prices jump up. And also, one implication of these higher prices of coal is that it just suggests to us that, you know, this move towards the green industrial revolution, this zero emission policy is it's in the early stages. For instance, UK plans to achieve its goal of zero carbon emissions by 2050. So that is like, what, 29 years from now. So it's still in the early stages, and it's not going to be a sudden move to greener energy sources. It's going to be a gradual move.
All right, do you think that the recent declines in price of lumber, copper, soya beans, and corn has, stalled the commodity super cycle?
Oh, no, not at all. I think that even though these commodities you mentioned have declined in prices, what we are seeing is that despite the decline in prices, they are still twice their typical price around this time of the year. So we are not seeing a stall. In fact, what's it called? The commodity super cycle is driven by a structural change in demand, which pushes prices above their long run trend. And what we are seeing now, because of the coronavirus pandemic, we are seeing kind of like a structural change in demand. One, we are seeing this move towards, this green industrial revolution. As I mentioned earlier, we are seeing, the United States rejoin the Paris Accord. We are seeing many governments commit to what's it called now, zero carbon emissions by some 2030, 2040, 2050. But also because of how the coronavirus attack the world all at once, we are seeing a policy move towards social protection. So those are structural changes in demand, and as a result, I do not think that this slight declines in commodity prices, which are driven by technical factors, is affecting the commodity super cycle.
Well, let's move a bit away from that now. The Naira exchange rate has depreciated further to 502 Naira for a dollar, while the level of gross external reserves is down to $33.55 billion. Why are we seeing this depreciation, and what's your outlook?
So I think for the external reserves, one reason why we are seeing this depreciation is because of the central bank keeps injecting FX into the market to stabilize the Naira, which is positive, I think. But also, we are not seeing the full benefit. We are not receiving the full benefit of higher oil prices, currently around $75 per barrel, because our production is still around 1.4 million barrels per day, keeping in line, keeping in line with the OPEC production cut. But also, I think we are seeing some speculative attacks on the Naira. We are seeing some panic buying. We are seeing people betting against the Naira. And I think that the central bank is going to, shock everyone, because they will keep on, injecting FX into the market. And also last week or 2 weeks ago, I see the central bank governor was trying to, incentivize foreign portfolio investors to attract foreign portfolio investors into the country. The central bank governor said that the fair value of the Naira is around 430 to 440 Naira to the dollar. And I think that if foreign portfolio investors come, we'll see it will lift up a little more pressure on the currency, because if you look at capital importation figures for last year, the total foreign portfolio investment declined sharply to around $750 million compared to 2019, which was around 1.8 billion dollars. So I think that also with higher oil prices, I think that our trade positions would move from deficit, or would narrow the deficit, so that there's some more inflow of dollars into the economy. And also with the central bank bank's continuous injection of FX into the market, I feel like the exchange rate is going to appreciate towards the end of the month.
All right, Desola, thank you so much for that update. Desola Sumoni is the research analyst at Financial Derivatives Company. Thank you so much for your time.
Thank you for having me.